We had the latest data out on inflation. The cost of living, it just shows you how fast prices are going up, sometimes going down in the economy. This is the rate of inflation. You can see the cost of living crisis there, inflation up in double digits, and now it's come down to there, 2%. It was 2% last time around, and in June it was 2% again. Good news in that that's where the Bank of England is trying to keep inflation, but bad news in that it was actually expecting it to come down a little bit more than that. And if you look specifically at the kinds of measures of inflation, because there's the overall measure of inflation, which is goods and services, but the bank is also focusing on this, services inflation in particular. It thought that that was going to come down even more, maybe to be about 5.1% now. In fact, it's still running at an annual rate of 5.7%. So, you know, when the bank is making its decision about interest rates, and that's where interest rates are right now, 5.25%, they have a big decision in August about whether they're going to start to cut and finally bring down the cost of living and bring down the cost of borrowing. Have a look at this, OK? Out there in markets right now, people are constantly making bets about what they think the bank is going to do, OK? So this line is showing you what they think the probability of the bank cutting interest rates in August is going to be. It's just the last few days. It was 50% before the inflation data came out. Then the data comes out, and look at what happens to this line. It goes down. So down from 50% to only a 35% chance of a cut. So a big fall there, suggesting that it's not necessarily in the balance, it's not necessarily 50-50. It actually looks less likely that they're going to cut interest rates in August. Even so, the cost of living crisis is at least abating, with inflation back down at the Bank of England's target.